please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, as per tradition, we have the Wipro management with us to talk about the quarter gone by. Thank you so much, gentlemen, for speaking to us. As always, I'm going to take my first question to Abid. Abid, tell me about the guidance. You know, last time around when we spoke, you had said that by the end of this year, that is by this particular quarter, you would be able to match up to industry matching growth rates. The guidance has a lot of areas of caution. So specifically, why is the guidance lesser than what the street was expecting?
Kritika, first of all, thank you for having us on the program. As I said, I'm myself disappointed with our guidance. And there are 2 or 3 factors at play in our guidance. And as I've always said, our guidance reflects what we see at the time that we give the guidance. So one factor is a surprise that we had of, unfortunately, 2 bankruptcies of our clients hitting us in the same quarter. If you remember, the first bankruptcy hit us in the first week of last quarter, and the second bankruptcy hit us in the last week of last quarter. Obviously, we took the margin hit emanating out of those bankruptcies in Q4, but the run rate revenue hit is reflected primarily in our Q1 guidance. The second one is HPS, our platform which caters to the US Affordable Care Act exchange business, has continued to see exits for reasons that are very well known, primarily having lack of legislative clarity in what happens with ACA, and because of that, some of our customers who are the insurance companies decided to exit, and those exits hit us both in Q4 as well as in Q1. That has had an impact. And the third one is a seasonal softness in the India and Middle East business that we have in Q1 has contributed a little more than what we would have expected. So those kind of 3 things coming together has been a perfect storm for our Q1 guidance. Although I'm quite hopeful from a long-term perspective, all of our strategic levers, whether we talk about our digital growth, which has been 9% quarter-on-quarter on Q4 and has grown over 27% year-on-year. That momentum continues. We are seeing a lot of larger digital deals. Our order booking in Q4 and through FY18 has been very robust, and that gives me confidence that the revenue conversion will take a quarter or so, but will start showing up in Q2 onwards. Overall, our account mining continues to be very good. Our top clients, the top 10 clients, have grown quite well at about 15%. So overall, I see a very good momentum, and that gives me confidence that we will return to growth Q2 onwards, and we will work through Q1 to execute on our strategy.
I like how honest you're being about the outlook, Abid. So by Q2, are you going back to the fact that by the second quarter of FY19, you will be back to industry matching growth rates on a quarterly basis?
So, Ritika, I've said it once, so I don't want to jinx it by saying it, but we will work towards executing on our strategy, and you know, the numbers will show for themselves. Okay,
but the headwinds that you are seeing at this point in time will start abating themselves by the second quarter.
That is right. The HPS piece has been a continuous surprise and disappointment for us. And you know, if you would remember, when we acquired it for 3 quarters, we grew it continuously very well, and it was at some point in time over $70 million of quarterly run rate, which is now in the low 30s. So it still worries me how it pans out. India, Middle East, I feel quite good that, you know, we are on a path of our restructuring where we are changing what we sell in the market quite significantly into digital and consulting-led transformation compared to some of the work that we did historically as Wipro Infotech in a lot of hardware and product-led services around infrastructure. So those things are panning out well, but you know, there is a rhythm to some of the legacy business declining versus some of the new business getting acquired and delivered. both in terms of the size of the deals as well as in terms of the speed at which both of these happen. So those are some things which we have built in our business model, because there will always be one or two verticals which are soft and other verticals which kind of compensate for them. But when things like bankruptcies or an HPS kind of unanticipated situation and uncertainty comes in, it becomes a little more difficult to be able to overcome, especially within the same quarter.
Okay. Jatin, let me ask you about the margins. As far as the margins are concerned this time around, adjusted margins, yes, are 16%. But if you look at the impact of the insolvency and the impairment loss that you took in, it's actually coming at a consolidated amount of 14.4%. So how much of this is likely to continue and trickle into Q1? And can you give us a breakup of the margins and the impact that you've seen this quarter?
Sure, Kritika. So if you see our reported margins of 14.4, and if you adjust this to impacts, you will be at 16%. So effectively, that's the normalized margin. And compared to quarter 3, we are lower by about 120 basis points, of which about 50 is from Forex and 50 is from the volatility in India and Middle East business, and partially from health plan services. So this is where this is how the margin stacked up for quarter 4. Going forward, if you see our operating parameters, they reflect good health. The utilization is very good. Offshoring has been quite good. We also have had a good year in terms of productivity that we have driven. Our quarter 4 last year to quarter 4 this year, the revenues have increased by about 5%, 5.5% with a reduction in headcount. So overall, we have driven good productivity. So the core business remains fairly stable vis-a-vis operating margin. We need to weather through the noise and the external volatility which is impacting our India and Middle East business and health plan services business in medium term as we work through this year. Specifically for quarter 1, we would have headwinds of lower revenues as we have guided, and we will also give salary increases from 1st June, and that will also impact on the margins for quarter 1.
You know, Jatin, I know you don't give guidance for margins, but is there a range that you are aiming towards? Is there an aspirational target that you're ranging towards for FY19?
Kritika, one would love to give a range, but we are going through many moving parts. So this year, I think it's much better to build a base, execute through the quarter, and build further on that in next quarter. So one would do that in a year like this, and not give an external range that one would want to reach.
Okay, fair enough. Bhanu, I want to build on the point that Abid was making on the fact that you've actually seen a better order flow as far as digital deals are concerned in Q4 than you have in recent times. So help me understand the kind of scale in terms of digital deals. 9% growth on a Q-on-Q basis is definitely significant. Are you expecting the pace and the scale to grow here on? And how large is this looking like? Because this is the one thing, Bhanu, that analysts seem to want to understand about. How large is the order book looking like for digital?
Yeah, so Kritika, our digital business is doing extremely well, like you said, and our order book gives a good momentum for the growth as well. Today, our digital business is almost 27% of our revenues, and we continue to see good momentum in the growth pattern for the digital business. It is primarily governed by the multiple things that we have done on the digital side. One, in terms of building capabilities that are very relevant for our markets. Two, customizing those capabilities for the digital journeys that our customers are taking in specific verticals. Three, establishing digital pods for customers where they can experience these digital solutions very quickly. And fourth, the entire delivery mechanism of building people, ensuring that they have the right skill sets and capabilities, and delivering these projects extremely well. So we have put all the foundation blocks required for making this digital business accelerate faster. Obviously, there is a great pull for the services that we are delivering right now. So the confidence on the digital business doing very well is very high for us right now.
Okay, fair enough. Saurabh, I want to ask you, the question that I always do. Attrition has gone up a little bit this quarter. Is it because of a seasonal impact that you have? Of course, Q4 is seasonally weakish for attrition. And in terms of the utilization, Jatin was pointing out on how utilization has actually inched up margin. So what more scale is there over there?
So, Kritika, on attrition, you're right. Q4 seasonally is a higher attrition quarter after Q3, where there's less of attrition, and we are seeing a slide. But if you look at over the last 8 quarters, attrition has moved on in a 1% band, so it is fairly stable. Where we are looking at and where we want to focus is on the right skills and make sure that we don't lose the people with the right skill sets, and that's critical, especially in the new areas like digital and others. And as Jatin mentioned to you, we would be going with a salary increase there, effective 1st January, in line with the industry. 1st June this quarter. As far as utilization is concerned, we are on a 13-quarter high. Last time I had mentioned to you that we have headspace. I still feel it's a big lever for us, amongst the other things, to help improve our margins, and we'll continue to work on this area. Offshoring is improving. So very clearly, we have the levers to look at our overall margin perspective. Attrition, I think, is very stable across the organization. Slight blip, but nothing it's more a seasonal issue from a quarter standpoint. And looking forward to good increases for the right people to make sure that we arrest the attrition in the right places.
Okay, gentlemen, thank you so much for a very honest and clear conversation about the 4th quarter, and good luck for the next 1 year. We're completely out of time, so unfortunately had this conversation. Thank you so much and good luck for FY19. Well, that was our conversation with the Wipro management on the earnings and the quarter gone by. We will take a very short commercial break on that note, but on the other side, the centre shoots off notices to Facebook and Cambridge Analytica for the 2nd time. Exclusive details on the other side. Don't go anywhere. Business Hour Plus. Now, the centre has shot off notices to Facebook and to Cambridge Analytica for the 2nd time, seeking more details on the data breach scandal. Remember, Cambridge Analytica has been accused of accessing over 87 million Facebook users' data in an unauthorized way. The entire episode has also raised questions on Facebook's privacy laws as well. Rituparna Bhuyan is here with the details. Ritu, what exactly are you picking up in terms of what exactly was in that missive that the government has sent out?
This is the 2nd set of queries which Ministry of IT and Electronics has sent to Cambridge Analytica and Facebook, and they have been given time till May 10th to reply. This was done because the first set of replies by both these entities were not found satisfactory by the government. Facebook has been asked what kind of security architecture is being proposed to be put up by Facebook so that data concerning India's are not pilfered or manipulated, especially with respect to elections, and if any such unauthorized use of data is known to Facebook, and what kind of measures it has taken, immediate measures it has taken to stop such pilferage of data. Other issues which on which information is sought includes Facebook's policy on privacy, if Facebook has initiated any legal action against entities which has violated Facebook-related policies. As far as Cambridge Analytica is concerned, the government has told the entity that its earlier reply seems to be cryptic, and the intention was basically to conceal more than reveal. Cambridge Analytica has been asked what kind of data basically was collected from Indians and what kind of research instruments were used to collect that data, as well as while harvesting such data, if informed consent was taken or not. Now it remains to be seen by when these two entities reply to the latest set of queries by Ministry of IT and Electronics. With that, it's back to you.
Okay, Rituparna, thanks for joining in with that. A quick look at some of the other business headlines today. GST Council will be meeting on the 4th of May. They are expected to discuss the conversion of GST network into a public entity. Now, sources tell us that SOPs for digital transactions are also likely to be on the agenda. Renuka Ramnath has resigned from Fortis Healthcare's Expert Advisory Committee. Fortis, remember, had constituted this panel to oversee the evaluation of bids. The board of Bharti Airtel has given its nod to the merger of Bharti Infratel and Indus Towers. The combined entity will be named Indus Towers and will continue to be listed on Indian exchanges. It will be jointly controlled by Bharti Airtel and Vodafone. Cement major Ultratech has impressed the street with its fourth quarter performance. Company's standalone revenue beat expectations on the back of higher volumes and better realizations. Time for another quick break, but up next, as we count down to Karnataka Assembly elections, we travel to Old Mysuru to get a sense of the voter sentiment. Will a traditional Congress bastion stay loyal to the hand yet again? Stay tuned to find out. Welcome back onto our special series. With close to 28 seats, the battle for the region of Old Mysore is crucial for all three primary parties. That's the Congress, the JDS as well as the BJP. As part of our ongoing coverage of the Karnataka elections, CNBC TV18's Rukmini Rao ventured onto the streets of Mysore city to get a sense of voter sentiment.
Traditionally known to be a Congress bastion, the Old Mysore region has gained tremendous importance in this assembly election, with even the Chief Minister, in fact, contesting from one of the assembly seats belonging to this very own region. The city of Mysuru, which falls under the Old Mysore region, consists of over 10 lakh voters who are very proud of the fact that they have been voted as one of the cleanest cities in India.
One praise we heard from most of the people we spoke to had to do with the city machinery's efforts to keep it clean.
Past 3 years, Mysore has been ranked as the first cleanest city. So I think I am very happy in that term. Thank you. So, and also I am very proud that I am Mysorean and it has been ranked the #1 cleanest city in India.
Corporation is taking so many steps to overcome this cleanliness. Like they are introducing the app, Swachh Bharat app, which is very good. In 48 hours, they are cleaning, which I also done it. Some 3 cases I have filed. They have cleaned it within 48 hours, which is very good.
But that's not an achievement the people are content with or even agree with. There is also a feeling that the administration has failed to realize the full potential of the city or gotten things done when it comes to core parameters like infrastructure development, avenues to boost tourism, which is a major pillar of the region's economy, and better connectivity.
Some issues are there which needs to be addressed. Like roads, parking, drainage. Is horrible. They said Swachh Bharat and all. I take you to 110 places where you will find how Swachh is the Bharat.
Hospitality industry, tourism has got the maximum potential to create a job for the unskilled employees actually. And Mysore has been neglected in those areas both by the central government as well as the state government. We are very much unhappy on this account actually. And tourism has got a lot of scope to generate local employment actually.
I'm happy and not happy, both are there. Mainly I'm a businessman. There's lots of, there's no business in business, there's no development in business. Still there are lots of industry has to come. MNCs and they're not coming, software companies are not coming to Mysore because they're not connectivity of anything like buses, railways, airways. There's not connectivity. There shall be development. There's not any development in the Mysore right now.
The last 2 years, it has lost its seat as a cleanest city. So I don't think that there has been a great improvement in terms of cleanliness, but per se the improvement in terms of the quality of the roads and in terms of some of the administrative aspects, yes, maybe there is some improvement.
So for now, Mysore city is divided on whether the current government has done its bit for the residents.
As far as the city of Mysuru goes, the 3 assembly constituencies, namely Krishnaraja, Chamaraja and Narasimharaja, are currently with the ruling Congress, and parts of the city that fall under Chamundeshwari, of course, with the JDS. With the people's expectation at an all-time high and going by the sentiment, this assembly elections is going to be nothing but a tough fight, not just for the incumbents, but also for the aspirants. In Mysuru, Rukmini Rao.
Okay, now moving on to the big national story of the day. A special court in Jodhpur today held self-styled godman Asaram and 2 others guilty of raping a minor in 2013. While Asaram has been sentenced to life imprisonment, the court has also convicted 2 of his aides. They have been sentenced to 20 years each. 2 other accused have been acquitted and their alleged involvement has been nullified. Asaram's aides have said that they will be appealing against the verdict and applying for his bail tomorrow itself. And with that, it's time to wrap up this edition of India Business Hour. From all of us here, good night and thanks for watching.